Our guest today, folks, this is pretty amazing. Okay, so Dan Zanger, he's a technical stock analyst, equities trader. He has turned $10,775 into $18 million between June of 1998 and December of 1999. He happens to be the world record holder for the largest percentage gain for personal portfolio for a 12-month and an 18-month period in the history of the stock market. You know, reading, I can go on and on. It's pretty amazing. Dan holds the one-year portfolio stock market appreciation, gaining over 29,000%. In round two, in 2 years, he turned 11,000 to 42 million. Now, we're not going to let Dan Zanger go. He's going to stay right here. And I'm not kidding. Dan Zanger, welcome to TFNN.
Hey, thanks for having me.
I'm telling you, man, you know, I was reading your bio, and I wear glasses, but I had to go get another pair of glasses to make sure I was reading the right thing, man.
Well, it is right, and it's audited, and I actually have the audit on my website. You can find it on Google and stuff like that. So, you know, I'm one of the few people out there that offer an audit for what I've done. So that's good news, and, you know, I'm looking for another bubble.
I like it. That's a beautiful thing. Well, listen, folks, you can go to eSignal.com, and when you go to eSignal, if you hit the education tab, what you're going to see is this, back in black. Dan is going to be speaking. This is worldwide. It's coming this Saturday, and it's free, folks, okay? So you can get Dan's knowledge absolutely free. He's going to be speaking from 12:15 to 12:45. His website is chartpattern.com. So, Dan, so tell me first, I got to hear this story, man. This is just amazing. So, first off, what chart patterns do you like? Is there a certain chart pattern you like, or how did you do this?
Well, you know, there are quite a few chart patterns out there. Some are very fruitful, and others aren't. And certainly, many stocks build chart patterns, and not all stocks follow through on the pattern. So you have to use a combination. I certainly like a channel pattern. Virtually any channel pattern that's either horizontal or descending.
Okay.
It's one of the most common and one of the most powerful. You see it building all the time. Let me see here. Alibaba just broke out of a nice channel here at 92. It just ran to $118.
Yes.
Baidu has just broken out of a stunning channel here, about a 4-month-long high-level channel. It's had a quick move from new highs at 132 to 150 very quickly. I mean, they just go on and on. Certainly another popular channel is a cup and handle. Yeah. Apple broke out of a cup and handle back in 2012, ran from $440 and went to $705. So those are probably two of the most well-known, popular, and productive chart patterns that I know about and that I seek and use constantly.
Yeah, you know what's so cool about channels, too? They take longer to basically line up, but it's really cool because they really do. It's a road, right? I mean, that's what they look like. It really
is. It's a map to higher prices.
Yeah.
It's basically a resting point in an upward trend. So we're looking for channels of all sorts, descending or horizontal. There's very few that are rising. Rising channels usually break to the downside. We try to avoid those, but there have been a few that have been very productive, but the channels are generally very low rising over a long period of time. SanDisk, in essence, broke out about 15 years ago out of a nice low-level channel from 30 and ran to 55. It was a little rising channel. So there are some, but most of them overall are very bearish, especially when the channel is broken to the downside. That's an excellent shorting opportunity. And certainly the steeper the channel, when that channel is broken, that presents itself with another ideal shorting opportunity. So
that's cool. And I heard, you know, when you first did come on, you're looking for bubbles because, of course, what does happen there, I guess, is that if it's breaking out of a channel on the way down, it takes you have a long way down, and the elevator seems to go faster on the way down than up, right?
It sure does. It goes down so fast. You'd better be ready. And I'll tell you, the problem with those shorts on very strong stocks is that many people believe it's a buying opportunity. So the minute the channel is broken, the stock can plunge. But you then find yourself with a lot of dip buyers coming in to buy the stock thinking it's on sale. And the stock rips back up, and usually it retests the channel break. And then it takes time, and then a lot of people are, gee, I really better be long, so it's a ginormous head fake. They go long, and then the institutions unload their shares at the higher price, and the stock turns and plunges once again, even further down this time. So, once that channel is broken, it is one scary ride down, shall we say, as a general rule.
Well, let me ask you this then. This is I love what you're saying, and I love channels in particular. Okay.
Mm-hmm.
Now, when the S&P in general, right? It seems that if I bring up the SPX,
Part of the S&P, it just broke.
It did.
A
Okay.
2-year rising channel.
Right. Okay.
It plunged incredibly quick.
Yes.
And this is one of the few instances where it came back up to the bottom of the channel and just kept on going back up into the channel.
Yeah.
That's what we call a revalidation of the channel
Okay.
that was broken. So that was negated, that break, basically. It was
okay.
Obviously, because it was a 10% drop, or 9%,
yes.
whatever you want to call it. That was what institutions were waiting for.
Right.
And, the Fed has become more, first they were tightening. Now with the slowing in Europe, they're more accommodative. So,
sure.
Bull markets typically don't, you're going to have whipsaws and breaks period, but bull markets typically don't end until the Fed has tightened too much.
Right, and they haven't even started yet, right?
They haven't even started.
Yeah. Yeah, man, I'm so happy to have you on, particularly because, that break in that S&P was pretty intense. I mean, when I saw that S&P broke, I'm not kidding, I was looking to say, the beginning of that channel was 1334 something. I mean, it's a large number on the way down. Do you know what I mean?
Yeah, there are many areas on the way down. 1820 was the first one that I had, and
yeah.
And that's where it stopped and just popped right back up. The next day it had a key reversal, plunged down. The next day it popped up, had a key reversal right off the bottom on massive volume, and the market just took off from there. For me, being a chart pattern trader,
okay,
I didn't really find any stock that had bases at the time. So I'm not a person who just jumps in merely because the market has found a bottom. I was waiting for setup, so I had to wait for Baidu to break out, and then wait for Alibaba, which broke out and ran a quick $30 on me. So
yeah, Alibaba, that was a nice ABC structure.
That was a nice big move.
That was. No, there's no doubt. I saw on your website, and his website, folks, it's chartpattern.com, and I saw, inside the reading, you got our man, Mr. Bill O'Neill. So that's intriguing when you can put CanSlim together with your channels, right?
Yes. Well, I actually known Bill for, I don't know, 30 years or so. Obviously I owe most everything to him and to another guy who was a TV host back in the 70s. He passed away here recently, but he had a show charting the market actually here in Los Angeles. And Bill used to be a guest
really?
On KWHY TV, and then I read his first edition book, and he said, if you do your homework, you're going to have more money than you're ever going to know what to do with. And he's right. But you got to do your homework.
Yeah, there's no
hours and hours and hours. I still do it to this day.
That's so talk to me about I was reading about how you got into the market. How did you get so involved in the market?
Well, I was your basic ski bum and basic bum, I guess you might say in some ways. But, out of high school, my mom used to watch KWHY TV. You needed rabbit ears to get it, Channel 22.
I love it.
Before cable.
Okay.
And it was the first show of its kind where they had a scrolling ticker tape, and it was all business and stock news all day long.
Yeah.
And so she would sit down, she would watch it all day long. If I came home from school or after work or whatever, I'd sit down. If I wanted to chat with my mom, I had to sit there and look at this TV show with this ticker tape. I'm like, what is this stuff?
I love it.
And so I made my first trade. I saw this $1 stock going by, and I sold it about a month later for $3.50. And
yeah.
And then this guy would come on with this show charting the market, and he would have an easel. The old day, they didn't have a teleprompter. He'd have an old easel.
Sure.
And he would take the charts from William O'Neill's daily graphs
right.
and blow them up, and he'd take a black felt pen, and he'd, just literally mark up all these charts, these parabolic curves, pennants, flags, cup and handles, channels. And I'm like, this is crazy. How can it be so simple to predict the future price movement of stocks?
Yeah.
Just by merely having these chart patterns.
Yeah.
So, this is it. This is how I started. I mean, and I've been on a quest ever since. And
amazing. Well, listen, I would love to have you on again. And
I'd love to be here.
That'd be a beautiful thing, man. It absolutely will. And listen, folks, the way you can listen to Dan this coming Saturday, go to eSignal.com. You're going to go to the Education tab, and you're going to see Back in Black. It's absolutely free. Dan, thank you so much. You have a great night, safe night.
You too. Thank you.
Okay, man. Have a great one.
Bye.